Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, mention and other fine folks, to the Someday Dispatch of the Black Letter, where we contemplate thoughts worth thinking as we try to navigate through the upside-down, topsy-turvy world we find ourselves in, hopefully coming across greener pastures on the other side, where we're wealthier, healthier, and wiser. That's the goal, trying to build our best lives. Okay, so on the agenda today, we have a bunch of different things that we'll talk about. We're going to look at Jack Dorsey's idea of what can be done to make Bitcoin better and more mainstream, and I have some kindred thoughts on that myself. We're also going to take a look at the budget deficit and the sort of minor correction. Is it looking like the 1920s? TLDR, yes it is, but as you know, I'm not certain that this is going to turn into the big crash just yet. I think we have to wait until post-elections, maybe towards the end of the year, early next year, maybe never at all, who knows. I'm just a guy trying to figure my way out through this disaster. Then we'll also look at SoftBank and how they might have been responsible for some of the stock market manipulation, as well as Stella. We'll take a look at Stella, sort of an understanding beginner's guide about it. So let's get to it. Welcome to the weekend edition, by the way, where we can spend a bit more time just looking at things and perhaps not so focused on the current market. Weekends are a nice bit of a time to take a break from all the craziness out there. So, all right, first up, inside Bitcoins, Jack Dorsey outlines Bitcoin's priorities for becoming a mainstream currency, and he's a huge believer, as am I, which is nice to see. We need, big players and folks with large platforms, as I think I mentioned before, interested in Bitcoin in a positive and informative manner. Jack Dorsey is a huge supporter of Bitcoin. The billionaire who founded popular social networking site Twitter and top payment processor Square maintains his belief in Bitcoin's potential to become the world's first true internet currency. And in fact, I would love to see Bitcoin become the world reserve currency over time. I'm not sure that will happen, but I think we would all be better off, and the world itself would be better off if that did in fact happen, but who knows? It's unlikely at this stage, in my opinion. Anyway, lots to read here, but we'll tease out a couple of the highlights. Bitcoin needs to be both cost and time effective. That's one of the things he suggests. And I agree with that. Currently, as they say here, BitInfo charts showing that an average Bitcoin transaction can cost up to $2.50. And as you mentioned, I think eventually I would like to see Bitcoin hopefully become quite a simple payment and an inexpensive payment option. $2.50 is a lot of money, especially for folks in the developing world who perhaps are only wanting to send $10, $20 at a time equivalent. I mean, that's a 10% fee on those kind of levels. So I think we need to get down to payments being just a few or a handful of Satoshis. And I think currently Satoshis are fractions of a pennies. And I think it would be best if we just had payments that were in the pennies per transaction realm. Hopefully that can get there. I know currently the miners are making their money primarily from Bitcoins that they are mining from proof of work. And so they're getting some of that Bitcoin through that process. But I think it would be helpful in the interim to try to figure out a way to get the payments down for transaction fees well within just pennies at the most, in my opinion. And also cost and time effective. Time effective, currently, as you know, as it says here, Statista also showed last month that it takes 9.4 minutes to complete a Bitcoin transaction on average. And that's not necessarily the end of the world, but I think as Bitcoin becomes more and more popular, we need to get that to the not only 9.4 minutes, but to fractions of a second, in the sense that we need to get Bitcoin transactions in the tens of thousands, if not more than that, in order to compete with the folks like Swift and Visa payment cards, those kind of things. Dorsey advocated that Bitcoin be more intuitive to people, and that's another thing I think is a bit of a sticking point you've heard me talk about as well. At this stage, you have to be somewhat technically savvy in order to buy, store, and hold onto Bitcoin. You need to be somewhat aware of security protocols. There's a whole bunch of processes involved. There's KYC. It's still nascent. The exchanges are becoming easier to use, that's for sure, as are the wallets. But putting all those things together is not necessarily the easiest thing at the moment. As I mentioned before, I think ideally we'll have perhaps a wallet that will connect all our different bank accounts, perhaps even at different banks, and perhaps even our stock portfolios, all these different accounts where we have transactions in fiat currency, and it will consolidate all of that with perhaps our cryptocurrencies as well. That's what I'd love to see. So, if I wanted to send, say, $1,000 to my mutual fund account, for example, I could just choose, let's say 0.1 or 0.095, excuse me, Bitcoin, and it would seamlessly transact that and change it into fiat to send off to the mutual fund at about $1,000. That's ideally what I'm looking at, so that they have everything in one place. And I think folks are working on that. There seem to be some apps out there that are available, I think, in the US and in the UK, perhaps Europe. So far, no, I haven't seen anything like that in Canada, but I don't think that's far away. I think perhaps within a handful of years. I mean, it's only been around for 11 years, and look how far we've come already. So perhaps by the end of this decade, I think interacting with Bitcoin and perhaps other cryptocurrencies that are still around at that time will be perhaps seamless. At least that's my goal. So there you have it. There's Jack's concerns about Bitcoin, and I echo the same ones. And I think these are very easily solvable problems for sure. My one concern is the cost of transactions. Can we get it down to the pennies? Because eventually the miners are going to have to be rewarded primarily via transaction fees, at least when we get towards the end of this century and into the next, when the halvings continue, and eventually in 2140 or thereabouts, there will be no more Bitcoins mined. And so transaction fees will be the only fees that Bitcoin miners will be able to have in order to secure the network. And so that there needs to be maintained at a level that helps them and keeps them in the game, but of course makes it payment painless for most of us who are transacting on it. And hopefully by then we'll have Lightning Network or something else where we can transact at the tens of thousands, hundreds of thousands, perhaps even millions per second, and all those will have maybe just transaction fees of pennies. And of course at that level, I think transaction fees will make up a good income for miners. So that's the goal anyway, my hope for the cryptocurrency and Bitcoin particularly. All right, let's take a look at the budget deficit. Budget deficit hits record $3 trillion as US spends 100% more than it collects year to date. And you know what happens when you or I spend more than we earn? Eventually that's a one-way ticket to recktville, where we go to bankruptcy street, right? So there you have it. Here's the total US debt. We've seen these kind of charts before. The Treasury announced that in August, the US burned through another $200 billion, which was a sharp increase from the $62.9 billion deficit in July. And of course, I think we're going to see something coming up in the next month, I would imagine, more stimulus. Potentially, I am still confident that Congress will get their act together and pull out more stimulus. Of course, currently they're at loggerheads, as you probably know. At least if you're interested in that and you need the money, then you know that things are not going well between the two parties at the moment. And of course, that's the leaving the average working stiff to carry the bag at the moment. And there's a lot of pain out there. It's probably going to get a bit worse. But I think we'll see the Treasury print more money. Not the Treasury, the Fed Reserve. I think they're going to be printing a lot more money, regardless of what happens with the Treasury and the Congress. And that's only going to increase this deficit, I'm certain. And here's the federal government spending. You can see the increase, decrease, increase, and now back down again because they haven't done much. They can't come up with a specific stimulus plan, right? And here's the federal government receipts. You can see there's also dropped as well. And those are much lower levels. This here is between 200 and 300 billion. And this level here is 400 and 500 billion. So, there's arguably an issue with receipts compared to expenses, as we all know who have to run budgets because we're not all multi-decker millionaires, right? On a year-to-date basis, with 1 month left to go in fiscal 2020, the US has spent $6 trillion and collected just $3 trillion, which means outlays are a record 100% higher than receipts. There you go, right? Total outlays here, you can see 423 billion, 223 billion, and that was just for August. And here is the surplus deficit through the full fiscal year 2020 thus far. 6 trillion, yep, and 3 trillion. Because in the US, unlike in Europe, 6,000 billion is actually 6 trillion. I don't think that's the case in the international units, but there you have it. And since outlays equal receipts plus the deficit, it will come as no surprise to anyone that in the first 11 months of fiscal year, the US budget deficit is a record $3 trillion compared to just $866.8 billion in 2019. So really that's almost 4 times, I think, what it was. So $3 trillion higher than that at any other time in US history. And unfortunately, due to helicopter money, it is unlikely that the exploding deficit will ever shrink again until the monetary system is overhauled or collapses. And I think you're right. I mean, look at this. There's one outlier here, and without even looking at the bottom of the chart, you can tell which year this is, right? Of course, this is 2020 in the red here. So just brutal. At some point, the market will realize that this insanity is simply unsustainable. And in fact, look at the soaring price of gold, recent temporary downdraft notwithstanding, that realization may not take too long. And you're right. And I think, the central bankers around the world, I think the group of G7 and G20, whatever they are, I think they're also talking about the Great Reset. And of course, this was a big topic at Davos, where all the movers and shakers go to shake hands, kiss babies, and try and dictate world states of affairs together, sort of somewhat conspiratorial, I think, but not without perhaps malicious intent necessarily. Anyway, I don't want to go down that rabbit hole, but there you have it. Interesting. Here's another interesting chart we spoke about earlier. This one is the Dow Jones then and now. So then, of course, is the 1920s, as you can see here across the bottom. You can see the big crash that they had, not as big as ours. So they bounced up not as high as we've done. As you can see, we dipped way below and then bounced right back up. We got much closer to perhaps the all-time high. Of course, they didn't, but you can see that we're starting to drift down now. So maybe this is it. Maybe over here is where we're going to head towards the election period, and then perhaps this is going to cascade down again, continue for the next few years. Potentially, history does not necessarily repeat. It often rhymes, though, so it gives us an idea. As I've mentioned before, if you can understand history, you have a great lens to look into the future, in my opinion. And this comes from an interesting article, too, that I will share with you down below. I don't want to go through the whole thing, but there's just tons of charts here you can see that talk about the current state of affairs. And it's really quite troubling. As we know, we're in the midst of it. However, there will be good times on the other end. But we just have to gird our loins, as they say, and protect what little wealth and income savings we have, so we can make great opportunities when those opportunities, we can make great use of those opportunities when they do come, which I think will be in the near term. In the next 6 months, I think we'll start seeing some real sort of sanity return to the markets and some real truthfulness and valuation metrics being met. At least that's my goal. In the meantime, I'm just sticking to the sidelines and putting my money solely into cryptocurrencies, primarily Bitcoin at this stage. SoftBank reconsidering the infamous gamma squeeze option strategy. All right, and those of you fairly familiar with options, is that gamma is one of the option Greeks that folks pay attention to, that sort of affect how the option actually changes over time. So there you have, that's a gamma squeeze, and gamma is a bit of a confusing option for me, so I'll leave that up to others who consider it more important. Not one of those things I'm particularly concerned about, to be honest with you, in the types of options I do, which are generally debit spreads and covered calls and even naked calls. So there you have it. But anyway, the SoftBank had already closed out most of its infamous public investments, which also included various associated derivative strategies that caused much market havoc last month when the market was swept up in a historic gamma crash-up, whereby the VIX rose and the S&P rose, and where stock prices and calls were caught in an unprecedented feedback loop that led to ever higher prices and ever more call buying. And this certainly would explain some of the issues with this sort of bear market rally, if you will. I still refuse to call it a bull market because I don't think we have out of the bear market yet at all. And of course, there's a lot of manipulation. Some of this, as you can see, was done by SoftBank under the sort of tinder, if you will, or the spark of the Fed, in my opinion. SoftBank was among the main culprits behind the market's gamma squeeze, as it was turbocharging the returns on its brand new investment management subsidiary. Okay, perhaps I will read a little bit about what a gamma squeeze is here. As you can see, options traders closely watch the value of delta and gamma. Delta is a measure of the volatility of an option price, and gamma is a measure of the volatility of delta, I guess how much delta moves from time to time. I'll leave this article here for you as well in the description if you want to have a read of it. But for our purposes, it's not necessary to really understand it. Only to understand sort of the overview of what's going on here. You can see this is the establishment of the investment management subsidiary they did, and these are a chart or a table of the stocks that were involved in these specific option or purchases, I should say, regarding the underlying that many of these SoftBank owned the underlyings of all the stocks as well. So buying call spreads, a strategy which, according to press reports, netted SoftBank some $4 billion in profit, an amount roughly equal to what it had spent on option premium, a remarkable return in just a few weeks. Of course, folks didn't like that, and it's SoftBank's stock, which came down substantially. The collapse in shares has caused Sun, who is the CEO of SoftBank, to reconsider continuing the trading strategy, but it's not clear what changes might be made. And this is the guy who apparently is the architect of the specific approach. It appears that the combination of SoftBank's whale trades coupled with Robinhooders who had been buying up calls like mad in recent weeks, and accentuated by the front-running of these option trades by high-frequency traders who have been trading ahead of the tide of Robinhood trades, ended up culminating in a perfect storm that sent the Nasdaq, the S&P 500, and all the FAAMG stocks to all-time highs at the start of the month, only to immediately lead with the fastest ever correction from an all-time high in history, as it emerged that the gains were not on anything fundamental or tangible, but merely on an historic gamma squeeze. It has also led to what Bank of America earlier today called the most fragile market on record. So folks, these guys are robber barons. This is the men dressed in fancy suits that are robbing us blind and contributing nothing to society, in my opinion. All they do is manipulate markets for their own benefits. I have a love-hate relationship with the stock market. We have to be in there, unfortunately, because of the type of society that we have created. But nevertheless, these are the folks. What's his name? Masa-san or Masayoshi-san, I think is his full name. They talk about him here as Masa-san, but I think his full name is Masayoshi, I think, son. Arguably CEO of SoftBank. I think they do produce some things, so I'll give him a bit of a pass. But these clowns, Akshay Nahata, and the rest of the hedge fund guys and stockbrokers, in my opinion, do very little for society other than manipulate markets and make money off of the discrepancies within it. And of course, this is a huge problem right now. We've just unearthed that. And of course, the SEC is asleep at the wheel. And this will continue as it always has done, because we live in a capitalist system which rewards greed primarily at the end of the day. There you have a little bit of taste of my opinion on that. And moving on, let's go to Stella. So what is a Stella? Well, Jed McCaleb was the co-founder of Ripple, as we know. We've spoken about this before, created another decentralized and open source network called Stella back in 2015. And the reason I'm bringing this up, of course, is I own Stella, probably about 80% of Bitcoin currently, but then I have some Ethereum, which is probably my next largest holding, and then probably Ripple, my next largest, and I would think Stella after that, and a bit of Litecoin. And then also recently bought 25 Polkadot, I think, as I had mentioned earlier. Stella concentrates on people who do not have access to banks or are in less developed areas with limited banking solutions. Similar to Ripple, Stella intends to make international transactions more reliable, faster, and accessible. Stella's digital currency is called Lumen. Lumen is a blockchain-based, and Stella started with a supply of 100 billion lumens. The one thing I like about Stella, which is different to Ripple, is that Stella has a finite supply, and Ripple does not. Also, the Stella network is open sourced. Stella is owned by the public and has no official owner. Like most other cryptocurrencies, it is based on blockchain technology, but unlike Bitcoin or Ethereum, it is a lot faster and offers its services for a fraction of a penny, and it doesn't require mining either, so it is less energy intensive. Stella has completed more than 450 million transactions that were requested by more than 4 million individuals. This might sound like a lot, but it's not a lot, because Stella has been around, I want to say, for 5 or so years. So that's only 100 million transactions, and I'm sure, you know, that's a drop in the bucket compared to perhaps Bitcoin and Ethereum, I would imagine, and especially the traditional payment networks. Stella is focusing on easily accessible international transactions that are affordable for everyone, and as you know, sort of somewhat on the unbanked as well. Stella's intent was to improve already existing payments, not to replace them. Stella has its own currency, as we know, named Lumen, XLM, previously known as Stella's. Every account on the Stella network needs to have a small number of lumens for two reasons. The digital currency is used to cover for small fee transactions, which makes sure that the software runs smoothly without any scam interference. The exact number of lumens per fee is 0.0001 XLMs. And this is basically where I think we need to get to with Bitcoin. We need to have perhaps 0.00000001 Satoshis as part of a Bitcoin fee. I think we need to get down to that kind of a low-based fee. One of the strengths of Stella, obviously. Lumens exist because they act as a bridging currency during all transactions that require two different currencies. So, for example, if you want to send money, $100 US dollars, to your pal in South Africa, and so that they get the equivalent amount of rand, which is the South African currency, then you would lumens would be the intermediary currency that exchanged those. So you would take your 100, well, you wouldn't, but the application or whatever the software you're using would take the $100 US dollars, exchange it to lumens, and then on the other side exchange it back into rands. And of course they're using up a small fee of lumens as well. So that's basically how that works. When the Stella network was launched, 100 billion lumens were created and put into the network with a 1% annual increase of their supply in the first 5 years. In November 2019, the total supply of lumens got reduced due to the community vote held in October 2019. After November, the lumen supply was lowered to 50 billion, and no more lumens are planned to be made. So that's good news. And it goes on to tell you about how you can buy lumens, store them, etc., etc. And here's a little bit of the difference between Stella and Ripple. Stella and Ripple have many similarities, hence why they are each other's biggest competition. Ripple put their focus on attracting banks and big corporations, so systems like SWIFT could be replaced because they are outdated. On the other hand, Stella is focusing on monetary literacy. So there you have it. Okay, let's take a look at the markets. I want to see if the markets were up over the past week. I'm going to suggest that they were down, I think, all three of them slightly. But let's see, I could be wrong. Okay, so the S&P 500 index was down just over 3% or almost 4%, 3.84%. So there we go, 1 out of 3 so far. Here's NASDAQ down minus 5.32%, as you can see, over the past week. So 2 out of 3 ain't bad, as the Meatloaf song goes, I guess. Let's see if I have a winner chicken dinner. And here's the Dow Jones down minus 2.92%, almost 3%. So yay, I was right on this one. Mind you, I'm looking at the markets every day, but I certainly didn't check for the past week overall. But there you have it. Markets have been down, I think, now. It will be 2 weeks in a row. We'll see if they can confirm a third. I have a couple of debit spreads that are expiring this next week. Probably will be total losses. However, the nice thing about debit spreads is that your loss is capped at the amount you spent for that debit spread. So we'll take a look at those when I close them out. I think I have a couple that I had spoken to you about earlier, FFIV and I think AAP. So we'll take a look at those. So we'll see how the next few weeks go. I've got some debit spreads expiring pretty much every week here from next week on until the end of October, just before the election. Of course, at that point, I'll take a break because elections are going to be very volatile, I think, usually, and I don't want to be in the market, especially with options that have a limited time frame in order to succeed. So there you have it. Okay, let's check out gold and silver first, see how they did over the past week. Okay, so interestingly, though it didn't look like it, gold is actually up 0.41%, so 41 basis points. So there you have it. I'm surprised by that. I thought it would have been down. And I think if gold is up, I'm going to guess that silver is up a little bit more than that. And no, silver is actually down. Silver has lost 0.46% or 46 basis points, whereas gold was up 41 basis points. All right, on to cryptocurrencies. Okay, last 24 hours, a little bit of an up day, 1.3%, 345 billion market cap. As you know, I thought we were going to drop down below 300 billion. We didn't. So perhaps now we're edging towards 400. Let's see what happens. 5,888 coins for your purchase and pleasure. That's down just under 20, I think, from the last we saw. It was just over 5,900, if I remember correctly. And here you can see the top coins by market capitalization. And Bitcoin inching up back towards 200 billion market cap, which is good to see. Ethereum outperforming Bitcoin, but XRP is not. Polkadot is outperforming Bitcoin. Binance Coin, of course, Litecoin, Cardano, and of course we would expect in the next bull run generally, if you're familiar with the space, that the altcoins usually run up ahead and then Bitcoin sort of comes in as a laggard to catch up. We'll see if that happens this way this time as well. Okay, Tezos, Stella up, starting to show some oats there a little bit, which is good to see. Monero up. So generally some good movement upwards. Yearn Finance up 16.2%, 44% over the past 7 days, and that's primarily because they got onto Coinbase. But of course, I never chase things that are heading up. I like to get things at a discount. That's generally true in life as it is certainly in my investments. So there you have it, folks. Those are your main coins, the top 40 or so. And on to the online oracle for today's most pressing question. Okay, so a bit of a longer question here, but we were talking earlier about Jack Dorsey and what he seems to think needs to be done with Bitcoin in order to make it more mainstream. And of course, one of those issues was the high transaction fees. Not as high as the gas fees or the transaction fees in Ethereum, of course, but still too high to become really a global monetary currency, if you will. So my question for the 8-Ball Economist, the online oracle, is will Bitcoin transaction fees get down to pennies per transaction in the next 5 years? I have no idea, but I hope so. You may rely on it. Okay, this 8-Ball Economist certainly is reading my mind and giving me all the answers I want. Hopefully they're right. But perhaps this 8-Ball Economist is starting to talk its book, as many of these other anal cysts have been doing lately. And that's why I use the online oracle, the 8-Ball Economist, because it's just as, in my opinion, probably just as accurate as any other monkey or analyst on Wall Street. But there you have it. Thanks so much for joining me, folks. Hope you have a great weekend. Stay healthy. Get out into the sun. Go for a walk a little bit. The vitamin D seems to help the immune system. Of course, pay down some debt and squirrel away some savings. And thank you so much for joining me. I appreciate you and your comments below. Let's share the journey together so we can come out the other side healthier, wealthier, and wiser. But above all else, remember, even during these difficult times, dum spero, spero.